Hi everyone, welcome to Finance Square. My name is Zari and you guys are watching another crypto section. Now in today's video, we're gonna be covering for the one that are just entering the crypto sphere, for the one that has been with us for quite some time, even for those expert out there. So in this specific video, we're gonna be providing you guys all the information and tips that you guys need to know in order to buy cryptocurrency. So looking at the con and pros in regarding buy cryptocurrency, different payment method, selecting the right cryptocurrency platform or exchange. Also, this will vary based on your trading strategy, if it's you're looking to buy or hold or trade, for example. Regarding if you actually are looking to use different interface on your selector, your preferred platform will have different fee structure as well. And also we're going to be looking at how you can limit your fees when you're actually looking to buy and trade cryptocurrency. So when you should look at buying cryptocurrency and how long you should hold it, and obviously what is your exit strategy. So again, all these things I'm going to be covering in a specific video. Again, this is just an educational purpose. It's not a trading advice. It's just to give you some more information, some more insight to better manage your cryptocurrency strategy and holding. So question number one, what payment method should I use when I actually looking to buy cryptocurrency? Now, this answer will vary from one platform and to obviously to different countries. But a rule of thumb is that if you're using your credit card or your debit card, in 95% of the cases, you're going to be charged a fee because you're using a credit card that the platform needs obviously to pay to the card processing company. So if you have the option, try to avoid using a credit card for the purpose of buying real cryptocurrency asset. Now, if you're looking to buy derivative on, for example, CFD or trading platform, for example, then there won't be any fees for processing the card payment method. Now, if you're looking to buy real cryptocurrency using your credit card, then one of the best platforms I actually think is actually good for that purpose is eToro, which I'll provide the link description, also the review for you guys to read more about it. So eToro provide zero fee for buying cryptocurrency through the trading platform. Again, I'm saying through the trading platform because if you were to use the eToro wallet, then they actually are using a third-party services for the purpose of processing those credit card payment methods. So again, if you are looking to buy cryptocurrency, you can do it via eToro trading platform without any additional fees for the purpose of buying cryptocurrency. Now, one of the most common knowledge, if you want to buy cryptocurrency, you should definitely look at doing a wire transfer where you obviously have zero fee and end of a story. But wire transfer is not that convenient. Now, for inconvenience, you're paying a low fee. For very easy, smooth onboarding and payment method, you will be charged an additional fee. So I'll go back into it afterward when I'll be talking about different interface. Now, selecting the right place where you buy cryptocurrency will vary based on where you are based. Obviously, if you are in Europe, if you're in the US, there's obviously multiple options for you guys to buy. And obviously, the second thing you need to obviously consider is, am I buying to hold? Do I actually want to have a wallet and obviously take the risk to manage my cryptocurrency? If the answer is yes, you also need to look at a platform or an exchange that give you the right to withdraw the real asset. If you don't care about holding those cryptocurrency and you want to just get an exposure, so obviously you can look at maybe CFD trading platform. There's plenty of them. I'll provide some example and some options for you guys where you won't be liable for holding cryptocurrency. You're just gonna get exposure to the price movement of the crypto assets. So if you're to buy, let's say based on today's price of Bitcoin today at $40,000, and you were to go to $100,000, you'll be making $60,000. Obviously, if you were to use without leverage, great. If you use leverage, then obviously you are potentially increasing your gain, but obviously you're also increasing your losses. So obviously, this is something you need to consider and remember. Now, using the right interface can really make a big difference. Now, if you guys are lazy, sorry, for those that are lazy, you guys know you're lazy. If you guys are one of those people, you're obviously going to be looking at the app and just literally click buy and end of the story. Now, some of those companies out there will make the whole structure, the whole ability to buy cryptocurrency so easy that it's super fun and seamless and enjoyable. Now, for this easy onboarding process of you actually buying cryptocurrency, you're actually paying a premium fee. Now, in some platforms, you might call it instant buy, where you actually might end up paying just almost 4% fee just for processing of the credit card. And obviously, you have an additional fee because you're buying through the app. In some cases, called limit buy. So you may be looking at 0.5 and additional fees on top of the price of the asset. So this is something that people wouldn't know, and you might see one of those apps where you can actually buy cryptocurrency for $20, $50, or $100, and just you put 50, 100, you click buy, and have a story. But then look at the fees. So some of those fees for $100 can even reach at the $5. So please, if you're really serious about it, if it's a one-off, please go and do the easy buy, where you actually do instant buy. If you're going to be doing it for the next year or for the next few months, please try to avoid instant buy. So maybe go through the actual website and actually click on limit order. So I'm going to explain what is limit order, market order. So limit order is basically you actually placing an order. Basically, you have a wishful request to buy a cryptocurrency at a specific price. And basically, if this were to exercise, then obviously your order will be executed. So that is limit order. Then you have something called a market order. So market order is basically you are buying the unit you want to buy at the current market price. So let's say the current market price is $40,000 for Bitcoin, and now you decide to buy with $100 million at market price. You might be actually paying in the end not $40,000, you might be paying maybe even $50,000 average price, because you're buying the cryptocurrency at any given price to get able to exercise this order. So this is where you're actually going to be paying a premium fee or premium price cost. This is something for you guys to avoid. And if you're not that patient, you're doing a small amount, great. If you're going to be doing a large amount of money, $100,000, $1 million, obviously try to avoid using a market order. Now, they will see in most platform or most cryptocurrency platform, we have two fee structure. You have the taker fees, and then you have the maker fees. So the maker is someone that actually start to add new order to the order book. Basically, by doing that, you are enriching the order book. And if you are placing a taker, so you actually order or taker fees, basically you actually are taking from the order book. Therefore, you actually are reducing the liquidity. So because of that, in most platforms, because you're taking from the order book, you obviously are paying a slightly higher fee. And if you are making, so basically adding liquidity to the order book, you're not paying, you have a discount fee for doing so. Now, most people ask, when should I buy cryptocurrency? Now, the question is, what cryptocurrency are you trying to buy? Has it reached already an all-time high before? Are you now buying it at a lower than all-time high? If you're buying something now that today, let's say Bitcoin reached $100,000, and you're trying to buy today at all-time high, most likely there's going to be some retracement from this current price, and you need to know about it. The price of Bitcoin might even drop to 50,000 or 60,000, meaning for you, it might be 40% drawdown or loss, for example. So try to avoid buying anything at all-time high. Again, my strategy, which I think it's nice, obviously it's not very realistic all the time, is to try to buy something at around 90% or 50% up to 90% range from the all-time high. I'll feel a bit more comfortable knowing that the retracement from this current price won't be as deep as if I were to buy it at all-time high price. One of the most classical examples I have for you guys, if you're now to go to CoinMarketCap and look at the coin of Internet Computer or ICP, for example, you're going to see that it went up to $700. This coin, when it got listed within I think a week or so, and then it went down by over 95%. So from $734, it went to $20. So imagine that you were the guy that basically decided to buy it. It's gonna reach to 10,000, reach to $5,000, and reach whatever price, and you buy it at all-time high, and now you have put $100,000 at 734 price of one token, and now it's $20. So you're gonna be really hurt, you're gonna be really bummed, and you're gonna be really discouraged from entering this cryptocurrency. So again, please take into consideration that all cryptocurrency except stablecoin, that's the exception, will have a drawdown up to 90%. In some cases, it might even be valued at zero. So if you know that, you also want to buy it not at the peak. So if you're looking to buy for long-term investment, obviously you need to decide if you're going to use it like ETF, you're going to use maybe indices, for example, that track Bitcoin price, or if you actually want to hold the actual asset. Second thing, you can also look, if you're looking to trade for the long term, again, what is long term? Are you talking about 1 month, 6 months? Obviously, you need to look at, are you going to be trading with future? Are you going to be trading with CFD? Looking at option, for example. So you obviously need to understand what is the expiration date, when are you expecting your price target to reach? Is it the next 6 months? Is it next year? What is the likelihood for my price target to reach, and what is the downside? For example, you now decide to open a position using a leverage, let's say of 10, of using, let's say, Bitcoin now is $40,000. Decide to put now leverage 10, and you're so confident in the next, let's say in the next 1 month or the next 6 months, Bitcoin gonna reach $100,000. This is what you feel, you're so certain. Now, if you look at this, you use leverage 10. So leverage 10 means if the price of Bitcoin were to go up by 10%, you're gonna be enjoying a double. You're gonna be doubling your investment. Now, if you were to go down by 10%, well, you're gonna be losing all your money. So obviously, try to understand what is the market volatility for this asset you actually are looking to trade. Obviously, being positive is amazing. Also, try to be a bit more realistic. So maybe even using leverage 2, even leverage 5 is a bit risky. For more long-term strategy, it might work in your favor. Now, I also want to maybe give us some more explanation about what happened in the past. Now, one of the best way to maybe look at investing in the assets is obviously to look at the fundamental. So in this case, I'm looking now at Bitcoin halving. So Bitcoin halving, okay, so basically this happened every few years where the halving, so basically the reward for mining Bitcoin get cut by half. So in 2012, new block reward was 50, and then it went down to 25. So price on halving in 2012 was $12, and price after 150 days after the halving was $127. Now, if you look here at 2016, on the halving date, it was $650, and then $150 afterward, it was $760. Now, if you look at 2020, so 2020 on the halving date, we had 8,821, and then on the 150 days afterward, it went out by, I would say, 20% or 25%. So around from 8,800 to almost $11,000. So now, so the next halving that is happening is we're looking in 2024. We're now in 2021. So if you guys looking to enter cryptocurrency, maybe placing an order or starting buying Bitcoin, for example, might be a good strategy, because you already know there's going to be a big event that will happen in 2024, and you know there is a tendency for the price to go up around the halving. Some cases 6 months before, 1 year before. In other cases, you have a big price movement upward afterward. So if you were to enter cryptocurrency, or if you were to look at entering Bitcoin, deciding to exit around end of 2024 or 2025 might be a very good strategy for you guys to look into, because we're saying now we know there's going to be an event that will definitely affect the price, because if you look at previous cycle we saw it. So this is something obviously can be a good strategy for you guys, and obviously there's the same logic, the same strategy can be used for other cryptocurrency. If it's, let's say, they're gonna add some staking benefits, let's say Coin never had any staking capability, now you can actually stake and earn reward for obviously having an X amount of that cryptocurrency in your wallet. This can be different strategy, different like incentive that might push the price upward. Obviously you need to select good project. So this will be my way of looking at holding and exiting strategy. If you look at exit strategy, I think that if you look at the VC, which I've been covering quite a lot in the past few months, most of VC has a strategy of 10-time return, or they have a 5 years or 10 years target. So my target, my personal target, is to invest and literally leave it for the next 5 years, knowing, again, I'm certain, maybe I'm wrong, that knowing that I'm gonna for sure double my money within the next 5 years on those specific cryptocurrency, because I have done my research, because I feel comfortable. So again, you obviously need to find that cryptocurrency that really talk to you guys and really feel comfortable. Once you decide what cryptocurrency, obviously decide what payment you're gonna be buying, how often you're gonna be actually buying this cryptocurrency, obviously selecting the cheapest and convenient way for you guys to buy the cryptocurrency. Learn how to reduce those fees over the years, because if you're going to be buying for the next 5 years cryptocurrency using the wrong payment method, the wrong trading fees, for example, you might be even losing $5,000 to $10,000 worth of fees, because you've been buying over the years so much cryptocurrency using the wrong method or the wrong platform. So you might have actually lost an additional income because all the money went for the fees. So if you need to take something from this video, take the following: select the right platform for you guys, select the right interface, try to find the cheapest way for you guys to buy cryptocurrency. If sending wire every month, it's not that easy. Obviously you need to maybe use an easier payment method where you might be paying fees, but it still won't prevent you from entering a cryptocurrency. And now I think you should probably know is never ever buy a cryptocurrency at all-time high, because there's a very high chance there might be a correction. Some of those correction or the market movement can reach in some cases up to 90% from the peak. So obviously take that into consideration. And obviously if you do not want to physically own the cryptocurrency or deal with it, obviously you can look at having an ETF exposure to Bitcoin or cryptocurrency, having different funds that give you exposure to it, even having your cryptocurrency wallet being managed by a centralized entity. Again, this is some of those options that I actually wanted to cover, and I hope this video was helpful for you guys. And if you have any comment, if you have any question, you can obviously send me a comment and I'll be more than happy to reply. Until next time, bye bye.